Hey everybody,
Welcome to another edition of Hops and Houses. I'm Robert Ring.
and I'm Valerie Kroll, and we're back!
We're back.
We're back!
Oh, we cheers to that.
Yeah, cheers to being back.
All right, so today we are at the Bore Taproom and Grill in Orinda, which is inside of Theater Square. Really cool ambiance. Come check this place out. The folks are really friendly too. They've got a great beer list. I love it. So far, we've been here for like 25, 30 minutes. Val's on beer number 2. I got here a little late, so I'm still on beer number 1, which today, I'll tell you what I'm drinking. I am drinking, going outside of what I normally do, and I'm having an IPA. This is a Ghost Town in Hume IPA. It's 7% alcohol by volume, which I was kind of surprised. Again, I'm not a big IPA guy. I don't like really high IBUs. I don't like really high ABVs. This has both. It's a 73 IBU, so you'd be thinking, wow, bitterness off the charts, like hoppier than, or more bitter than like a Sierra Nevada Pale. Not even the case. I tried it and I was pleasantly surprised. You do get like a nice waft of hops, like in your
Cat piss.
yeah, yeah. But like your olfactory senses get smacked with hops, right?
Yeah.
When you
Yeah.
you pull it up to the nose. And it starts off with just a hint of bitterness. It's so smooth though going down. It's got a really well-rounded. I want to drink one. Notes to it.
Well-rounded.
I like it a lot. So I pulled up some notes from Untapped, and I'll just read them to you real quick. It's an IPA brewed with Citra, Centennial, and Simcoe hops, so nothing special, unique, or out of the ordinary for an IPA, but Ghost Town just did really well on this one. 73 IBU, 7% ABV. It's got a little less than 4 stars on Untapped. People seem to like this one. I certainly do. Next, I'm going to try out their Ghost Town Pilsner, and with that, I will hand it off to Valerie for her beer review.
Because I have a Ghost Town Pilsner right here. This is a sweet little 5-pointer, and it's delicious. Nice, easy drinking. Ghost Town's doing a really good job right now. Because I had some of that. That's not, when I get hit in the face with the cat piss, I'm like, I'm out.
I had hit in the face with cat piss. Is the cat piss like what you smell? Is this like a post-COVID smell sensation, or is this? Do you think hops smell like cat piss?
I think you could hand a bearded man a glass of cat piss and he'd drink it.
That is disgusting. And that really hits home in a weird way right now because my one of my cats is in heat and peeing everywhere, and it's absolutely terrible. So
I'm sorry.
I need to go get her fixed. I've been trying to talk my wife into doing another litter of very adorable, very pricey kittens, but she doesn't want to do that. They're Scottish Folds. So, anyways.
All right.
So she peed all over my backpack. So, anyways, I guess.
So that's why you carried everything in a paper bag.
Yes. But my backpack doesn't smell like this beautiful Ghost Town in Hume IPA. It smells like cat piss.
But it does not drink like cat piss. It drinks delicious.
No, it doesn't.
Yeah,
it doesn't drink like cat
it's
piss.
delicious. Both beers are absolutely delicious. And I had, this is the Geisterfaust. That's what's called.
Oh, you got the Ghost Town Pilsner Geisterfaust.
Geisterfaust.
That's a very good beer. I tasted it.
Yeah.
And but everybody was recommending the IPA to me, and I was like, all right, I'm gonna step up and do the IPA today because me, I've probably drank a Pilsner or a Kolsch on every episode of Hops and Houses for the last 2 years, and I needed to step outside of the mold and do something out of the ordinary. Okay, so now on to our next segment, which is really straightforward. It's the houses part of our Hops and Houses. I told Val before we hit recording that I have no idea what I'm talking about today, but I'm going to do my best. I do know some things about the market, but the big thing that we're going to discuss today is inventory and why it's so freaking low. It's absolutely nuts. Right now in Pleasant Hill, there's like 5 homes on the market. 5 homes in Pleasant Hill. And how many people are in Pleasant Hill? Is it a demographic of 30,000?
100, I think there's...
Am I way off on that?
No, 35,000, and last week it was 5. We're in a boom in Pleasant Hill right now. There's actually single-family dwellings went from 5 to 9.
5 to 9.
Doubling over inventory.
9 homes for 35,000 people that live there.
Yeah, so, do the division. 9 goes into 35, carry the...
Let's do the division.
Every 3,000 people, there's a house to buy.
Every 3,888.88 people, there's one home. Just in the town of Pleasant Hill. Now, people are obviously moving in, right? But still, that's an interesting number to look at. We've looked at the same numbers in Oakland and Concord. Do you have the numbers on those?
I have a number on Concord. Concord last week there was 24 houses on, and every Monday I do this.
Yep.
There's 24 houses on for sale in Concord on Monday of last week. There's 38 today, which is that's a huge improvement.
Surge in inventory.
Surge. Well, the problem with inventory is once it gets under 1.5 million nationally, we're in a crunch, and it's like people are just like throwing.
You have that stat?
Yeah.
What is it?
Wait a minute. What stat are you talking about?
How many homes are on nationally?
I
You
can't
said under
remember.
1.5. Are we under 1.5?
Yeah, we're under 1.5.
Oh.
So what's happening is it's like meeting Draymond in the paint. You're throwing elbows and probably getting nowhere.
For nothing.
For nothing. And it's tough. And I feel bad for buyers because it is really, really tough out there right now. And the thing is, every house is getting between 20 and 30 offers every single time. And it's not a matter, there's more people seeking shelter than there is shelter available for the people who are seeking shelter.
Yeah,
which
so all
is
these
what
people
the
are
problem.
left out in the rain. The proverbial rain that is
Someone left the cake
non-homeownership.
out in the rain.
Ooh, that's a bad image. Yeah, right before the wedding.
Yeah. So,
Okay.
but all of a sudden it's starting to pick up, which is good news. And what's driving this? And it's like you can talk to the
Lending side of it.
lending side of it, but from the real estate side of it, what's driving it is that there's more housing formations than there is housing available for those people. So there are more people seeking shelter than shelter available for those people. And once you get a situation like that in a capitalist supply-demand economy,
Yep.
you've got a problem, and that's what's driving the price because it's supply-demand, so that's driving the prices up.
Yeah. So we sound like a broken record because
We are.
every time we have a beer and we talk about real estate, we say the same exact thing, which is the amount of housing starts versus the amount of people in the population in a certain area looking for homes is like 6 to 1 in the Bay Area on average. It's just way outnumbered. So there's always this huge supply-demand issue that's driving home prices up. Now, let me talk on my ass for a second and just speculate on
That's
why
all
I
we
think
do is
that's all we
talk
do.
out of our
Yeah.
asses.
Yeah, your trusted source for real estate news. And
Right
beer.
out of
Hey,
our
the beer
butts.
is not out of our ass, okay? This goes directly into this orifice. Okay, I digress. A couple of things, I think. One is a lot of people are sitting on mortgages with very low interest rates right now because they refinanced in the last 2 years and got rates in the 2% range, which was
'Cause they're
amazing.
smart.
Because they were smart. There's still millions of people that need to refinance and can refinance, but a lot of them, lost their opportunity because rates just went up to the high 3s on conventional 30-year fixed mortgages, and we'll talk about that in a moment. But if you're a homeowner right now and you're considering selling, you're faced with a couple of things, right? Inflation is at 7%. Housing is not immune to inflation. Housing prices have risen 17% in the last 12 months. That's outrageous, right? So industry-specific inflation is really high in some areas. Service inflation is really high as well. If you look at restaurants, prices in restaurants.
Contractors.
Contractors is another one. Obviously, certain
Plywood.
commodities, because of the cost of gas has gone up so much. There's a lot of things that are pushing up prices for people all around. I can give you an example. Today, my housekeeper wanted like over a 10% increase in pay, and she had a very logical, valid explanation. And it was that cleaning supplies are more expensive and gas is more expensive, and so she's making less money doing the same job, but she's having to pay more for everything else in her life. So of course we agreed and we gave her the 10%. It was more than 10% raise. But imagine having to have that conversation with everybody that she does work for. It's a difficult market to live and work in, and that's not. There's no exception to that when it comes to housing, right? So you're a homeowner. You're sitting on a 30-year fix at 2.5%. Sure, you're going to sell your home for a whole lot more than you bought it for, but then you've got to take that money, you've got to buy back into a market with rates that are over 1% higher than the rate that you just left. Buy nice low-cost mortgage savings. You've got to reconcile a new payment, which is going to be high even with a nice interest rate, because property taxes will be based on that new purchase price, which again is 17% higher roughly in the Bay Area than it would have been 12 months ago if you sold and purchased something. So overall, you've got to grapple with the idea that if you sell, you've got to go back out and buy something that's very, very expensive. Sure, you're going to make money, but you're also going to pay a lot of money. And that's true. That's why we say never time the market. But because whenever you sell in a low market, you buy in a low market. You sell in a high market, you buy in a high market, right? But the
And
second
don't
thing going
day
on there.
trade where you lay your head.
Don't day trade where you lay your head. I love that phrase. Yeah, I totally agree. The second thing going on here is that if people sell right now, how are they going to get their offer accepted? I mean, if you live let's say you want to buy a house in Pleasant Hill, for instance. I would love to own a home in Pleasant Hill, as long as it's not in the flood zone, which there's a lot of areas in Pleasant Hill that are in the flood zone, right?
It's a big flood zone.
It's a big flood zone, FYI. What am I going to do? I'm going to sell my house and go, great, hey Val, help me buy a house in Pleasant Hill. What are my options? There's 9 homes. We can see every house for sale in Pleasant Hill on Saturday.
Right.
Wow. And we can offer on every single one of them? Wow. And get our offer rejected on every single one of them? Wow. So when am I going to get my offer accepted? Am I going to be stuck at Extended Stay America for 6 months? We
with
don't
your
know.
cat and heat?
Yeah, with my cat and heat. And at the same time, with my cat and heat. That would be awful. Oh my God. Markets are crashing. Like, crypto has completely crashed. Val doesn't, you don't trade crypto.
No, I don't trade
She
crypto.
trades stocks quite well, but not crypto. I trade crypto, and I sold like almost all of my crypto like a month ago, and I'm glad I did because it's dropped a whole lot more. I basically pulled out everything that I put in and left a few thousand in that I had. So I made some money, but I would have made a lot more if I'd sold back in September. That's crashing. Stock markets are crashing. Tech stocks are crashing, which often is followed by layoffs at those tech companies. With the exception maybe some of the giants like Google and Facebook and Apple, right? They may not be doing layoffs when their stock fluctuates. So that moves on to another thing that we're going to talk about. But why is inventory tight? I think because the prospect of selling and being able to buy something else is really challenging for people on numerous fronts. And I don't think people are ready to go jump into the foxhole that is the buyers, the market. They've got to jump in being a buyer and go make offers on these homes. They're competing with 30,000 people to get 9 homes. It's unreasonable.
Well, somebody pointed out to me the other day, which is really true because, confession, I will watch this show if it happens to turn up. Love it or listing, right? And the English woman, I can't remember her name, goes in, and remodels their house, and then, the other guy is like, I'm going to try to get you to buy a different house.
Yep.
And what happens 75% of the time? They stay where they are.
Really?
Yeah.
Interesting.
Yeah, they stay where they are because moving, there's a lot involved unless you have a background like I did where, or you're a military brat.
Yeah.
And in my case, I don't know if we've even talked about this on here, but my father was a real estate broker, and if he had a buyer that needed a 4-bedroom, 2-bath house in Fremont, and he couldn't find him a house, he told my mom to clean the house, and he sold him ours. And he did that 3 times.
I never met her dad, but I love him.
I know, it's like right now, I kind of feel like I want to clean my house and sell it.
Seriously, well, I'm selling a house right now in Oakland. It's hitting the market on Wednesday. If anybody watches this and is wanting to buy a home in Oakland, it's a great house.
I am not the listing agent, so it is not a violation of clear cooperation. Carry on.
I'm going to put like one of those little COVID disclaimers at the bottom, but not a clear cooperation violation. This is why. Disclaimer. Yeah,
Suck it, NRA.
So I'll talk about it for a minute. It's a 2-bedroom, 2-bath in the Frick neighborhood near Mills College on 60th Avenue. It's a full remodel. It's absolutely stunning. Inside and out, recessed lighting, giant galley kitchen designed by my friend Alina Druga. Shout out to Alina, amazing designer. It's got an ADU in the back. Y'all know how much I love ADUs. They are amazing. If you put this on Airbnb, you will cover 75% of your payment. I can show you how. Anyways, it's an incredible investment for whoever buys it. Seeing the market on Wednesday. Let's move to a different topic real quick. I want to give a quick spiel about what's happening in the bond market, the mortgage-backed securities market specifically, that bond market, and how it's affecting interest rates, and what's going on around that. So this, in the last 6 to 8 months, you've seen news about inflation. It's gone through the roof, right? And it started in July when we got the report that inflation had risen from 0.2% up to 3.98%. It's a huge jump. Right, people were saying things, biggest, inflation in decades, biggest raise in, decades, whatever. Let's talk about that for a minute. So it went to 3.98%. A couple months later, it goes to 6%. Fast forward to now, we're pushing 7, and it's going to go higher. It's not on the downtrend. It's on the uptrend. We're climbing the initial phase of the roller coaster that is inflation. It's affecting us right now. It's happening for multiple reasons. But the Federal Reserve is stepping in saying, we're going to curb inflation, we're going to get it under control because we're going to stop doing quantitative easing, which means we're going to stop stimulating the market by keeping interest rates low because it costs us money. We got to print money and spend that money in order to do that. We've got a big balance sheet. A balance sheet is basically a piece of paper that lists how much debt you have and how much assets you hold, right? So when the Fed says we need to reduce our balance sheet, that means they need to sell off their debt. That means that they want to sell bonds that they've bought. They've purchased bonds with money they printed, and they're going to sell that off. And so this process is called quantitative tightening. It sounds really complex, but it's not. You know, the United States has a central bank, and they step in and they can stimulate the economy when needed during recessions. COVID was considered a recession, right? So they stepped in, they lowered interest rates for everybody. So car loans, credit cards, home equity lines of credit, and most importantly, mortgages rates went way down. They just sunk, which is incredible. It allowed people to save a lot of money and buy a lot. If you go back to February of last year, inflation was at 0.2%, and this was 10 months after the most aggressive quantitative easing in the history of the United States, history of the Federal Reserve, everything, right? And inflation was next to zero. Next to zero. Let that sink in. Fast forward several months in May, we passed the economic stimulus bill, the COVID stimulus bill. It was a $2 trillion bill.
Gave people money they didn't need?
Gave people a lot of money they didn't need, including Val here.
I didn't spend that money.
She didn't spend it.
I did not contribute to the economy.
She got a large check. We won't talk about how much it was, but you know, Val owns a business, right?
It was 5 figures.
It was a lot of money, and she got that. But the example here is that Val's not alone. She's not a unicorn. She's not unique in this way that she got this money. I actually didn't need it. A lot of people got this money and didn't need it.
Right, and so that's why I held on to it, because I didn't need it, but I'm like, who the hell else did they give this money to that went and spent it?
I didn't get 5 figures, I got 3, but no, I digress.
Yeah. They give you a couple $100?
Maybe $100, yeah. So, but I don't have my own business, you know. So anyways, we pushed money into the hands of people. You know, I kind of call it an experiment on universal basic income. In some ways it was, in some ways
I should have spent it on beer.
It wasn't. You probably could have. I would have benefited
probably
from that.
Already did. don't know it.
And so, you know, you push money into the hands of people. Now, the problem with just giving money to people like that, you know, without discrimination, let's say, you know, like let's say you need it, you don't. Let's just blanket give money to everybody. Is you slow down the economy, because people work to get money, and working keeps the economy going. And when you have money, you're not going to go to work. Now, some people really needed that. You know, people in the service industry really needed that. You know, we could have stomached service industry inflation by itself. It could have risen and come back down through this. But when you just hand money out to everybody, you know, people were getting paid to stay home. I had friends that said, it's not worth it for me to get a job because I'm making enough staying home. And some people did well with that, and they, you know, they pivoted and they found a new career and they took on a business, whatever it was. And some people sat on their couch and ate popcorn. No harm either way. I think it's great for the people that made something of it. But all that to say is, when you push money into the economy like that, you slow it down because people don't show up to work. When people don't show up to work, you have supply chain issues, which we're seeing.
GDP issues.
Crazy problems. And then you've got inflation, because you just put money into the hands of Americans. And so when you talk about inflation, it doesn't get any more basic than that. Well, then that gave the Federal Reserve an opportunity to step in and say, well, we can fix it by pulling back quantitative easing. And it's really misleading, because Jerome Powell, who leads the Federal Reserve, is lying to the American people by saying he can fix inflation with quantitative tightening by reversing this process, right?
That's true.
In theory, you know, on paper, he might be right. But in practice, it doesn't work that way. We know from history that when the Federal Reserve engages in the practice of what we call quantitative easing, it causes deflation, not inflation, right? So the cost of things go down. And here's why. When they do quantitative easing, they put money into 2 markets specifically. This last round, they did 3. Mortgage-backed securities market and the treasuries market, right? So our bond market, our major mortgage bond market, and our treasuries market gets strengthened, right? When that happens, other investors around the world with institutional investing licenses, this includes other countries, Greece, China, India, you know, Europe, etc., they go, oh, these markets are stable. Why? Because the most successful country on earth is putting their currency into these markets. So what's not going to fail? These markets. So let's put money into it. So when they put money into it, guess what happens? It strengthens our dollar, and it strengthens those markets, and it causes deflation, because our dollar now becomes stronger than everybody else's dollar. If you remember, shortly after all this occurred, the COVID whole pandemic thing, our dollar got really strong compared to a lot of other dollars, Canadian dollars, Brazilian dollars. I remember before going into the pandemic, the Brazilian dollar was a little bit less than 4 to 1. So for every $1 bought $4 Brazilian dollars. After they did the quantitative easing, those markets got strengthened so much, it was 6 to 1. 6 to 1. My wife was saving up to help her parents buy a house. She took $6,000 and put it into an account in Brazil and got over 30,000 reals. They call them reais, right? Incredible exchange. But that's what happens. So when the feds pull back from that, guess what doesn't happen? Deflation, because we're no longer supporting those markets. International investors with big institutional investing licenses go, hey, the U.S. is no longer backing these markets that we put all this money into, so what are we going to do? We're also going to sell. And all of a sudden you have a flood of huge corporations and countries selling mortgage-backed securities and treasuries that they bought from the United States. And what happens to our dollar? It gets weak. And what happens to inflation? It goes up. And that's why, with quantitative tightening over the last 6 months, inflation has continued to rise, even though Jerome Powell has said we were going to start the process, and the market has anticipated this change. And so he's lying to the American people about this. And as a result, rates have gone up over 1%, crypto markets have crashed, tech stocks have crashed, and inflation is through the roof and is continuing to rise.
There's going to be a test on this later.
There is. And if you pass, you get a free beer.
We'll buy you a beer
Yeah.
if you can regurgitate any of that shit.
So if you followed that, or if you have questions about that, post a comment below. I'm happy to answer it. But that is what's happening in the market, and it's kind of complex, which is why a lot of lay people or people that are not in it like I am, staring at it every day, don't see what's going on. But for some reason, Jerome Powell has been able to pull the wool over the eyes of the American people and President Biden, unfortunately, because he was renominated when he absolutely should have been fired. And he was put back in this position. He basically doesn't believe in the process of quantitative easing, and he's in charge of it. Think about that for a minute.
Well, and that brings a really good point, is because you're in it all the time and I'm in it all the time. And so it's like when you see a story on KRON or KTVU or whatever this afternoon, it's like those guys, number one, they're running 2 or 3 weeks behind. And number two, they're not in it like we are. And they're not dealing with it every single day. And it's tough out there for buyers. It's really tough, and it's an inventory situation, and it's an inflationary situation because the prices are running up, but the interest rates are still decent. They're still good.
They're not bad.
No.
But what happened last time rates went up this aggressively, and Jerome Powell did it, by the way, same thing last time, 2018. What happened? We had tight inventory in the beginning of the year. What happened halfway through the year, 3/4 of the way through the year?
A drunken sailor could buy a house with a wink and a ace of spades.
Basically, we went from like 30 homes on the market and conquered over 300 in 6 months because rates went up. Now, we're going to have that effect, but right now it's being dampened a little bit because there is really, really low inventory right now, and so there is really high demand. And it'll.
But there are people that have things they want to do.
They do. It'll take a little bit of time, but you will see more inventory come on the market, and home prices will regress a bit. And this is true every time quantitative tightening happens. It slows down the economy. This is why it's absolutely asinine to do this right now. Jerome Powell thinks that the economy is coming back. It's coming back to life. Yet I watched an interview the other day on MSNBC where this lady who's getting near retirement, middle class, says groceries are now double. I can hardly afford to pay my grocery bills every month. I'm trying to figure out a way to retire. My granddaughter loves it when I make her bacon, and I can barely afford to add that to my shopping list every week. People are struggling, and Jerome Powell, sitting on his mighty throne at the Federal Reserve, going, "Oh, the economy's coming back." There are 4 million job openings right now, and he's saying that the economy's coming back, and they're pointing to false indicators in the market like jobless claims. Sure, there's less jobless claims. Look at job openings. People can't hire. Everywhere you go, help wanted signs. I was in Montana last year. You see Dairy Queen, $500 bonus to be a cashier at Dairy Queen. When in God's green earth have you ever seen a $500 bonus to be a cashier at Dairy Queen? I mean, give me a break.
Montana.
In Montana, of all places. You know how much money $500 buys you in Montana? Well, not so much now, but a lot, right?
Yeah.
Absolutely unbelievable. The economy is not back enough to go, it's time for quantitative tightening. Jerome Powell is exerting his fiscal theories and beliefs on the economy that is not ready for it yet a second time, because he can, fool me once, shame on me, fool me twice. Fool me once, shame on you, fool me twice, shame on me. But the problem is, there was no fool me twice, because Trump nominated him first, and then Biden jumped in and nominated him again, right? I wish he had a better advisor, somebody that could step in and go, hey, this guy is got an ulterior agenda, because he absolutely has an ulterior agenda. But either nobody told him, or he didn't believe it, or the people around him advising him couldn't see through what Powell was pushing. But it's on a roller coaster to nowhere good, I can tell you this.
Yeah, the interesting thing about it is I find myself in this weird spot because it's like I shouldn't love, I mean, shouldn't hate quantitative easing, but I do because I don't like the government involved in the markets.
No, I don't believe in quantitative easing either, but we're in the middle of it.
And we're on opposite sides, and we both don't believe in quantitative easing.
But when it comes to fiscal stuff, we're probably
right on.
We're probably in the same
exactly.
boat.
Yeah,
that's the thing. You know, a lot of the
because
stuff
we
that's
want
talking points
best.
Is loud.
Yeah,
we want what's best, and it's stupid. You know, I also don't believe in quantitative easing. Probably just like Jerome Powell, but my approach to getting out of it would be much different than ramrodding us out of it. You know what I mean?
No, you got to ease us out.
You got to ease so slowly.
Gently.
Janet Yellen was terrible at this, in my opinion. But she had every opportunity to really slowly ease us out of quantitative easing, just tighten ever so slowly from 2013 all the way up to when she got out of power, which was 2018, right? So she had over 5 years to do this with a booming economy, and she didn't do it. And then Jerome Powell got in, and he was like, rate hike, rate hike, rate hike, rate hike, rate hike.
It's like, no, bro.
It hurt the economy. Yeah, no, bro, right? There's got to be somebody in between Janet Yellen and Jerome Powell that can go, you know, every year and a half we get a little 0.25% rate hike or a 0.5% rate hike.
I'm available. I would do it right.
Seriously. And then he comes out, and here's his problem. He comes out, he does these news conferences, and I'm sure, you know, you see it at home. You go to the Fed's going to raise rates, they talk a bit, and then markets go wild. Well, it's because he's too vague, and so everybody gets to speculate on what he's doing. And then during the press conference afterwards, where they ask him questions, he drops enough hints that people figure out what he's actually trying to do, and then speculation goes wild, the markets anticipate something, and because here's something, let me tell you, very interesting. During the Nixon administration, they...
we're going to Wayback Machine.
We're going to the Wayback Machine for a minute. The economic advisor of the Nixon administration started doing something called job owning, which in this, it's a boxing term, but in this context, what it means is you'll make an announcement to the people, you'll see how the markets react. If they react the way that you want, you'll go through with it because the markets anticipated what you're going to do.
Oh, right.
It all works. We're going to do it, right? So, you know, the people who run the Feds are no dummies, and they know how this technique works. Janet Yellen was a master of this. So every time she announced we're going to do rate hikes, well, the economy wouldn't respond well. So guess what? She didn't do rate hikes, right? Well, she was just like the never take action person, right? Jerome Powell doesn't care so much, but he also looks at these things. He knows that when he speaks, when he opens his mouth, markets change drastically, and it causes people a lot of money. He probably has a lot of security because he's probably a very wanted man by some very bad people. But
I kind of want to punch him.
I would knock him out if I had the chance. Like, no joke.
He probably has really such scary security.
I'm sure he does, right?
Big guys.
He comes out and he says,
shoes,
well, we're not
heads.
sure if we're going to do rate hikes. We're going to really assess each time. He tries to be as vague as possible, right? And then these reporters, they're not stupid. They ask him questions. Well, what if the economy does this, 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 and this? Would you rate hike? Well, in that situation, yeah, we'd probably look to do a rate hike in March. Oh, so basically, here's the headline. Feds look to do a rate hike in March as long as the economy stays the way it is. And guess what Wall Street does when you say that? Guess what crypto markets do? Guess what bond markets do? Guess what treasury markets do? Guess what international investors do?
They just vomit.
Go, sell everything, right? So everything crashes. And then he goes home, he pours himself a glass of whiskey, he sits down and he goes, oh shit, I just made markets crash. You know why? It's because he's way too vague. All he needs to do is go, we're not going to raise rates. The economy is not where it needs to be yet. We hope that it continues to improve, and when it does, we'll consider raising rates. But until then, we will give no promises to raise rates, and we will give no plans to raise rates, and we'll keep rates the same, and we'll keep quantitative easing on the same pace until there's better improvement, because right now there's not good enough market improvement to do that.
Joe, I could figure this out.
And when the press conference guys
hire me,
drill him on this, all he has to say is, I'm going to say the same thing. We're not raising rates. The market's not ready for it. When it is, we'll do it. But it's not. Okay?
Yeah.
Inflation's too high. Quantitative easing causes deflation. We're not going to turn that around. We're not going to pull this back. We need better GDP. We need lower inflation numbers. People need to be able to afford the groceries that they're buying to put food in their kids' mouths. Right?
Right. And that's the problem.
Makes me so mad.
You know,
you have
once
a pair of brass knuckles?
No, I don't need them, man.
She doesn't need them. I might. She doesn't.
I got a left hook that'll drop his ass. Once upon a time, after Giametti passed away, I wanted to be the commissioner of baseball. And they didn't call me, but I'm telling you, I would make a good president.
I think you would.
Of the
no
reserve.
Question.
Because I wouldn't mess things up.
No. I mean, how hard is it? I mean, like, Jerome Powell knows what he's doing. He's not an idiot. He's not an idiot.
He's got an agenda. Anyway, we're out of beer.
We're out of beer. We've talked for a
But
long
we're
time.
at the, we are. We're at the Fourth Bore in Orinda.
Check it
at
out.
Theater Square. They've been super gracious to us, and they have a fantastic beer menu. And I've been watching the food come out of here, and
Time to get some.
oh, dude.
We'll post some pictures of the food too. Thanks for tuning in. We'll see you next time on another episode of Hops and Houses.
All right, peace out.